Good morning, everyone.
Morning, sir.
Yeah, good morning. Yes, we are welcome to another section of the class. So today we'll continue from where we stop, which is the value-added task. So we'll continue with the note aspect before we go to the calculation. So in our last class, we discussed about what? Value-added task, which we stated that is presently, which is at the rate of 7.5%, and which is collected and administered by only the Federal Inland Revenue Service on behalf of the various arms of government that is collected on behalf of the federal government, the state government, and the local government. So we all know that. So we're going to continue. Today we'll be starting with method of computing. Can that person mute his mic? Method of computing what? Calculating VAT liability. Method of calculating VAT liability. Method of calculating VAT liability. So under the VAT system, we have three methods that we can adopt to calculate the VAT. There are three methods that can be adopted. The first one is invoice credit method. We have the subtraction method and we have the addition method. We adopt and use in Nigeria, which we are also going to talk about it. So as I said, we have three methods. We have the invoice credit method, or they may also call it the credit method. So either way, either invoice credit method or the credit method. So which is what? So how does the invoice credit method apply? So this method involves a scenario of what? Calculating your output VAT. We all know what output VAT is. Output VAT, that is the VAT on sales. Whenever you sell, any VAT you collect from your sales. So that will give rise to what? Output VAT. So when you are making use of the invoice credit method or the credit method, you are going to calculate your output VAT. Then you also calculate your input VAT. That means each of the various VAT will be calculated separately. So we are going to calculate our output VAT, which is a VAT on sales. We also calculate our input VAT, which is a VAT on purchases. So the VAT on purchases will now be deducted from where? From the VAT on sale. That is, you are going to deduct your input VAT from your output VAT. The resulting figure will give you what is called value added tax. So simply put, under the invoice credit method, that is the method that involves a process whereby the input VAT is deducted from our output VAT to know the amount of VAT payable or VAT refund. We can also have VAT refund when your input VAT is more than your output VAT for a particular VATable period. So under the invoice credit method, the input VAT will be deducted from the output VAT to know the amount of VAT refund to be what? To be collected by the VATable agent or VATable person. So, and this method is the method that is widely used by most of the world, and it is implemented in Nigeria. Method is also the method that we adopt in Nigeria. So, in the exam, when you are given a question, the examiner will not tell you using what invoice credit method. It will ask you calculate what the VAT payable by by the VATable person. So it is now left for you to know that you are going to adopt the invoice credit method, in which you are going to calculate the output VAT and the input VAT separately. That is what for the invoice credit method. After the invoice credit method, we also have another method, which is the subtraction method. So the subtraction method involves a procedure whereby you are going to get what is called the value added amount. That is, you are going to deduct the total purchases at the value added. The purchases will be deducted from the sales to arrive at the value added. So it is this value added that you now apply what? Apply the VAT rate on the 7.5 on to arrive at what? At the value added tax. This method is not adopted or utilized in Nigeria. So, but you may be asked by the examiner to use this method to calculate your value added tax. When you are going to be asked for this method, the examiner will specify that you're using what? The subtraction method. So, which is what? The method of deducting the purchases from the sale to arrive at what? At the value added. So when you now get the value added, you are going to what? Apply the VAT rate to arrive at what? The value added tax. Under normal circumstances, when you have the same question, where you are given the same question. So if you adopt invoice credit method and what? And the subtraction method, these two methods will give you the same answer under the same scenario. Where you have the same question, where you are using the same question. Both your invoice credit method and the subtraction method will give you the same answer. But please don't adopt the subtraction method in the exam where the examiner did not specifically ask you to adopt that, because the method we use in Nigeria is what? The invoice credit method. Then why the last one is what? Addition method. Under the addition method, so this involves a scenario whereby what? You look at what? All rewards generated by what? Factors of production. All the reward generated by the factors of production. Basically, we know we have 4 factors of production. Who can mention the factors of production that we have? I need somebody to tell us what are the factors of production. There are 4 in number. So what are the 4 factors of production that are available? Factors of production.
Land, labor, entrepreneur, capital.
Yes, land, labor, entrepreneur, and capital. So those are the what? Those are the 4 factors of production. So all the reward generated by what? By all these factors of production will be added together as what? As the value added. So we know that the reward for land is what? So what is the reward for land? What is the reward for land?
Rent.
Rent, yes. So the reward, so the rental amount you are receiving, you look at the amount. The reward for labor is what? Wages of salary. The reward for entrepreneur is either they make profits or they generate income or they provide other services. Why the reward for what? For the last, for capital is what? Interest. When you invest your capital, you're expected to get your interest on that capital. So all these rewards generated by all the factors of production will be added together. When you add those rewards together, what you have is what? Value added. So this value added, you are now going to apply, you now apply what? The rate of VAT, which is what? 7.5% on this value added to what? To arrive at what? At the value added tax payable to what? To FIR rate. So basically, those are the 3 methods of what? Of computing VAT. Where you are going to be asked for any of this method, the examiner will specify for it. But when the examiner does not specify, please take note that what? You have to use what? The invoice credit method. Now, if you now want to compute that when you are computing your value added tax in relation to what? Expenses. So the rule to be adopted when computing value added tax in line with what? Expenditure. Basically, for expenditure are grouped into 2 major forms. We have what is called the revenue expenditure and the capital expenditure. Revenue expenditure and the capital expenditure. So the first one is what? Capital. I want to look at the capital expenditure. When they say an expenditure is capital expenditure, these are the expenditure that are incurred on non-current assets. Expenditure incurred on non-current assets. On those assets that will last for more than a year. Assets that are going to be capitalized. Any expenditure that is incurred on them are called what? Capital expenditure. This expenditure, when you buy them, they are also liable to what? Value added tax. Please, any value added tax that is incurred or that is suffered on capital expenditure is not going to form part of our input VAT. Value-added tax suffered on capital expenditure will not be part of the input VAT that will be deducted from this. Value-added tax will be added as part of the cost of the assets. So when you don't add it as part of the cost of the asset, and when you buy any asset for the purpose of the business, that asset will qualify for what? Capital allowance claim. So that means the amount of that value-added tax is also going to be available for what? Capital allowance claim. So in that case, when you are claiming capital allowance on it, you cannot also what? Claim it as what? As an input VAT again. Because when you claim it for capital allowance, if you also want to claim it as an input VAT, that means you are going to claim a single expenditure twice, which is what? Which is going to be what? Double counting. So in order to avoid double counting, any input VAT suffered on capital expenditure will not form part of what? Input VAT to be deducted from where? From output VAT when you are computing your value-added tax. So such input VAT will be what? Will be capitalized as part of the cost of what? Cost of the capital expenditure. So please let us take note. Any capital expenditure, any VAT on capital expenditure is not going to be deducted from our what? Our output VAT when we are calculating what? When you are calculating your value-added tax. Such an amount will be what? Will be capitalized when you are computing your what? Your value-added tax. So that is for capital expenditure. Then we also have revenue expenditure. So these are the revenue, these are the expenditure that are incurred in order to allow for the day-to-day running of the business. They are what? Recurrent expenditure. Instead of calling it revenue, they can also call it what? Recurrent expenditure. They are expenditure that are incurred for what? For the day-to-day activity of what? Of the business. So these expenditure are grouped into two major forms. We have the direct revenue expenditure and the indirect revenue expenditure. Take note of that. We have a direct revenue expenditure and the indirect revenue expenditure. Please, when you are computing value-added tax, only the direct revenue expenditure will be part of the input VAT that will be deducted from our output VAT. Only direct revenue expenditure. The indirect revenue expenditure will not what? Will not be part of the input VAT because that indirect expenditure will be added as part of the cost of the expenditure, and it will be written off to what? To profit or loss account as an expenditure. So that means if you are writing it to profit and loss account, you cannot claim it again what? As an input VAT. Only the one that is direct to what? To the business will be what? Will be chargeable to what? To what? To the output VAT when you are calculating what? When you are computing value-added tax. And please take note that an expenditure that is direct to a business can be indirect to another business. The determination of direct and indirect revenue expenditure depend on the nature of the business of that the nature of the activity performed by that business entity. For instance, let's say we have a company that is engaged in what? It's an hotel business. So that means this particular company, their major activity will be what? They are going to provide accommodation, they are going to provide what? Food, they are going to be selling food, and they are also going to be selling drinks. So those are their three major activities. These three activities is going to form their what? Revenue expenditure. Any expenditure incurred on these three activities will be what? Revenue expenditure. This revenue expenditure now, when you are computing value-added tax, they are going to form part of what? Our input VAT. This same company is also going to pay for the service of, they are also going to incur the service of what? An auditor. They are going to pay audit fees. they are going to pay professional fees. These audit fee and professional fee are also liable to VAT, but they are not what? They are not direct to the business. They are not direct. Without that expenditure, the company can what? Can survive. But without the company buying drinks, because that's their major activity, there is no way to what? To generate income. So that means what? That audit fees or professional fee that the VAT they incur on audit fees and professional fee are what? Indirect to
Bàbá
what?
ti
To
jẹun
their,
tó fẹ́ yára o.
yeah,
Tá a bá ti lè parí bíbá yá àti
yeah,
pásítọ̀
indirect to their
ẹ̀dínlógún.
business.
Báyìí láti
Okay,
parí kọ́lẹ́jì
Lukman,
tó fẹ́ bẹ̀rẹ̀.
Lukman, mute your mic. Oh. So those expenditure are what? They are indirect to the business. So because they are indirect to the business, they are not going to form part of what? Part of the input VAT when you are computing your value added tax. That is what how to determine whether an expenditure is direct or indirect. If you are talking of another business now, assuming you are talking of a different business, an audit firm now, that food drinks is not going to be direct to them. That cannot be what direct expenditure to them. So an expenditure that is direct to one company can be what that indirect to another company. So the determination of direct and indirect depend on what on the nature of business performed by what by that vatable or taxable person. So that will form of direct. So also when you are what when item is also being imported into Nigeria, value added tax is also charged on what on that what on the imported value. So when you import output, that's so there's also what part of the charges you are going to pay as part of the custom duty is also what value added tax. That's why you see that what the rate when item is being imported, it is usually what very expensive. So because of what the high amount that is payable to on what on imported item. Also, we also have you may also be given a scenario whereby what inventory will be given to you. So inventory, that is when you have what opening and what and closing inventory. When there is what opening stock and closing stock. Please, when you are giving opening and closing stock, before you calculate your value added tax, this the inventory must be adjusted against what? Against our direct cost. What are the direct costs? Against your purchases, against your what? Your other direct costs, like carriage inward and other direct costs. So you must adjust the inventory against what? Against that direct cost. Then how do we adjust the inventory? We add the opening stock, we add the opening inventory from the direct purchases, and we less the closing inventory from the direct purchases. So the resulting figure is what we are now going to apply the value added tax rate on. And when you are making this adjustment, you have to ensure that what the value must be at the same level. What do I mean by the value must be at the same level? When you are giving the purchases to be what? VAT inclusive. The opening inventory must also be VAT inclusive, and the closing inventory must also be VAT inclusive when you are making the adjustment. When you are giving the purchases to be VAT exclusive, the figure for opening and closing inventory must also be what? VAT inclusive and what? VAT exclusive what? Accordingly. So all those items must be adjusted accordingly. Also, when you're also giving information about discounts, where there is discount, when you want to calculate your value added tax, you must also what adjust what that item. The value added tax must be based on what on the discounted amount. So what do we mean? So where a discount is offered for front payment, VAT is chargeable on what the net amount, regardless of whether the discount is taken or not. If, for instance, you said you are selling an item to somebody, you now said if you are going to pay within so dates, let's say the value of the item you want to sell is 10 naira. You now say if you pay within 3 days, I'm going to give you a discount of 2 naira, which you are going to pay 8 naira. What that means is that what the value added tax will be calculated on what on the discounted amount of what of 8 naira, because of that is the value that is payable by the buyer. Then where was supply made on contingent discount term, For example, depending on what on specified level of purchasing in a period, must be invoiced with VAT based on what the full amount. And adjustment being made when the discount is earned. So also when your supply is what is at a contingent amount, at a discounted amount at various rates, you have to look at what is the total invoice amount. The value added tax will be calculated on the total invoice amount. Then also where goods are sold to serve at the discount, VAT is due on the discounted price where you are selling. So maybe your sales price is, let's say, 20 naira. But because the person that want to buy is your employee, so you are selling that item to him at a discounted amount. When you are calculating the VAT, you are not going to calculate it on what? On the 20 naira. You calculate it at what? At the discounted price. The goods supplied under a hire purchase agreement are chargeable on what? On the cash selling price at the start of the contract. Also, where the item is sold on hire purchase, at the beginning of the contract, you must calculate the value added tax on what? On the cash price of that item. Where a trader charges different prices for customer paying cash and those paying on other means. VAT is charged at the standard rate, at each standard rate. So where you are charging, so different prices for those paying in cash and those buying on credit. So VAT is charged on what? On how much each of the customer is paying. Then when goods are permanently taken from a business for non-business purpose, you must also charge VAT on that item. VAT must be accounted on their cost. So what is the cost? Because you are not selling it, you are just taking it out. You must account for the VAT on what? On the cost of that item. Why? Because that item you want to take will have suffered what? Input VAT. So if you are not charging VAT, so that means what? You are going to end up telling government to refund you what? Input VAT on what? On item that you are using for your personal purpose. Then where service bought for business purpose are you for non-business purpose without charges. Then tax must be accounted for on their cost. But the tax to be accounted for is not allowed to exceed the input VAT deducted on the purchase of the service, which is just what I explained now. Because when you are taking an item that is not for the purpose of the business, that means you are not going to pay. So in that case, you will suffer input VAT. So if you are now taking it without charging VAT, so that means you expect government to charge to refund you input VAT, which is not possible. So that's why you must also account for the VAT on the cost of that item. So those are the way to calculate VAT or the process of treating VAT. So any question? Any question? The absence of, so let us continue. So we have a VAT return and remittance. It is also expected that throughout a VATable period, of what? 1 month, beginning from so VATable, so you are expected to file a return. So on or before 21 days of the following month. So all the VAT that you collected from January 1 to 31st January. So you have up to 21 of February to remit and to remit that VAT to FIRS. Failure to do that, that VATable person will be liable to penalty and interest. Then also we may also have VAT refund instead of payment. So the refund is when your input VAT, when what is more than your output VAT in a month. When what you suffer in form of VAT in a month is more than what you collect in form of VAT. So that is what VAT refund. And this refund can be by credit method. Credit method in the sense that you are going to be given a credit. So that means what the VAT you are supposed to pay in subsequent period will be deducted from your VAT refund. So that is what credit method. You have a credit to be claimed from where? From the tax authority. Or it can also be by direct cash refund method. Once it has been established, once it has been established and you don't have any VAT liability for subsequent period, you have a right to request for refund of cash from the relevant tax authority. So it can also be by combination of both credit method and cash method. So either way can also be the refund procedure to be made. So because the VAT, the person want to collect the VAT is acting as an agent to the relevant tax authority. So to FRA, the tax law also gave them a right to carry out rigorous process on the activity of that vatable person. So the FRA, they have a right to carry out enforcement and practice. Under this enforcement, we have three processes that can be carried out. We have under the enforcement, they can carry out what is called VAT visit. They can carry out a VAT drive. They can also carry out a VAT audit and investigation. So because you are collecting that money on behalf of the FIRS, the FIRS, they have a right to carry out what is called VAT visit. So under this VAT visit, the local VAT office, the FIRS office that is closer to your company, they can visit your company anytime without notice to look at your level of compliance, to look at whether you are complying with the VAT law, to ensure that you are deducting what is expected to be deducted. So the inspector from the local office from time to time visits the premises of every vatable person for the following purpose: to ensure compliance, to ensure the amount deducted as VAT are promptly accounted for. So they want to look at whether you are ensuring you are deducting VAT, to also ensure that amount you are deducting, you are remitting it as at when due, to examine method of keeping transaction, to also ensure that you are keeping your record of the VAT collected. So once they visit, they will ask for your book. So that's what they want to look at your book to be able to look at your level of compliance. So they will also educate your VAT agent on new development in the VAT system. So that's for VAT visit. Instead of doing, they can also do what is called VAT drive. So this is usually done by the zonal coordinator, the zonal head, by they visit your office periodically. So such tax drive are stimulated to collect or VAT proceeds from a defaulter, where they find out that you have stopped payment of VAT. So they carry out what is called VAT drive. The zonal office will visit your premises to stipulate and enforce you for the payment of VAT. This VAT drive is usually conducted for defaulter of payment of VAT. Then we have a VAT audit and investigation. Audit is different from investigation. Audit is usually done periodically. So that is the normal examination of your record to know whether the level of compliance is okay, to know whether what you deduct is what you remit, and they look at your book, they visit your company to carry out the VAT audit, so which is your audit process. They can also carry out what is called VAT investigation. Investigation is carried out when they suspect that the vatable person is engaged in evasion of VAT amount. When they suspect that you are engaged in fraudulent activity in relation to the vatable amount. When you are engaging in VAT evasion of the VAT amount, fraudulent activity. So as a result of that, they will carry out investigation of your record, which is usually done at the premises of the taxpayer. So these are the three enforcement process that are usually carried out by the relevant tax authority, by FRA. So this money collected by FRS now is not going to be kept by FRS alone, because the money does not belong to the federal government alone. The money belongs to both the federal, the state, and the local. So this money will now be shared among the three tiers of government in this ratio. 15% will be shared to the federal government, 50% will be shared to state government and the federal capital territory, while 35% will be shared to the local government. You can see that larger percentage is going to to both the state and the local government. Why? Because they are the one that are what? That are, it is from their state that this money is being generated from. So that's why a larger percentage is allocated to the state and the local government, which is the sharing formula of the VAT proceeds. So whenever a taxpayer is also not satisfied with any fatable amount generated as a result of tax audit or investigation, the vatable person has a right to appeal. So when you are now appealing, you are going to appeal to what is called VAT tribunal. VAT tribunal. So the tribunal is an example of a court. So, but it's the work of the tribunal is to look at VAT cases. So it's like a court that is established by the Federal Inland Revenue Establishment Act to consider value-added tax cases. So the tribunal will look at cases of value-added tax between FIRS, disputes of value-added tax between the Federal Inland Revenue and vatable person. So they will deliberate on the dispute to know what. So they will now come up with a decision because they are going to act. So it's like a court whereby the FIRS will be invited and the taxpayer will also be invited. So the taxpayer has a right to be represented by a consultant. So and presently there are 8 zonal offices of the VAT office that are in Nigeria. So we have 8 zonal offices located in Nigeria presently established by FIRS to look at various VAT offices. So the judgment of this VAT office is equivalent to the judgment of the Federal High Court. So the judgment made by the VAT office is like as if a Federal High Court is giving you a judgment. So after the judgment of the Federal High Court, if the taxpayer is okay with the judgment, the taxpayer will pay the tax. So the tribunal will now mandate FRA to issue a revised assessment, in which the taxpayer will pay the revised assessment. But where the taxpayer is not satisfied with the decision of the VAT tribunal, the taxpayer has a right to further appeal to the court of appeal. So after the decision of the VAT tribunal, we go to a court of appeal. So if you are not satisfied with the decision of the court of the VAT tribunal, you approach the court of appeal. So to also look at the scenario. So if the court of appeal also give a decision, the taxpayer, where you are also not satisfied with the decision of the court of appeal, you approach the Supreme Court, which is the final one. So the decision made by the Supreme Court, it will be final because that is the apex court in Nigeria. So that is the procedure to dispute any value-added tax that is generated by the Federal Inland Revenue Service. Also, under the value-added tax, we have what is called a VAT Technical Committee. So you may be asked for the composition of the VAT Technical Committee. Usually the chairman of the FIRS is usually the chairman of the committee. So the chairman of FIRS will be the chairman of the VAT Technical Committee. All director of the Federal Inland Revenue Service, all directors are members of the VAT Technical Committee. A director in the Nigeria Customs Service is also a member of the VAT Committee. A representative of the state government, which shall be a member of the Joint Tax Board. Representative of the state government, state government. That means each state of the federation is going to have a member represented as one member of the VAT Technical Committee. Why? Because that money also is also going to the state government. The legal advisor to the Federal Inland Revenue is also going to be a member of a VAT Technical Committee. So what are now the function of this VAT Technical Committee? To consider all tax matters that require professional and technical expertise and make recommendations to the board. So any matter that requires technical expertise, they are going to look at it and recommend to the board. So they also advise the board on its duty as specified in the act. They advise the board that, okay, these are what and what you are expected to do. They attend to such other matter that may be or refer to it as from time to time by the board. They organize meeting of technical importance on VAT matter with the board, so they can also organize that. So when you fail to apply with any of the provision of the VAT Act, there is also a penalty and interest. Please, you may also be asked. Examiner has also tested this particular question before, where they ask you to mention 3 penalty and offenses that are available under the value added tax. So we are going to look at some of them. So one of the penalties was failure to register for VAT after month of commencement of business. So when you fail to register, so you are going to be liable to penalty of 50,000 for the first month in which the failure occur, and 25,000 for subsequent month in which the failure continue. So that means if you fail to, after you have commenced, you now fail to register with FIRS. So you are going to be liable to an offense and a penalty of 50,000 in the first month that you are supposed to register, and 25,000 for subsequent months, and so on and so for up to the date that you register. The non-remittance of VAT within the stipulated time. As I stated earlier, if you deduct any VATable amount, you are expected to remit it within 21 days of the following month. When you now fail to remit that amount after 21 days, you are liable to a penalty of 10% of the amount you fail to remit, plus interest as well, CBN monetary or policy rate of that one, a monetary policy rate. So there's going to be penalty of 10% plus interest at what prevailing CBN monetary policy rate, plus what, plus that amount that's what you fail to remit. Falsifying of false document, information or state. So when you are giving false document, you are supposed to keep record, as I said earlier. So, but you are providing false document, false record, you are liable on conviction to a fine of twice of the amount that you declare. Evasion of tax, liable to conviction to 30,000 or double the amount of tax evaded. Then there is another one that is very important: failure to notify FIRS of change of address. You know, when we did registration, I also talk about deregistration. So when you cease operation, you are also expected to give FIRS that notice within 3 months of cessation. So when you fail to do that, you are also liable to an offense. Penalty of 50,000 in the first month after the failure occur, and 25,000 for each subsequent in which the failure. That is for failure to what? To notify them of change of your address or permanent cessation of trade. So when you change your address, you are supposed to tell them. Or when you permanently cease your operation, you are also expected to notify FIRS of that information. So those are so another important is failure to submit VAT return to FIRS. So you fail to submit, penalty of 50,000 in the first month, and 25,000 for each subsequent month in which the failure occur. So you may be asked to mention any of these penalty and offense. So when you're also aiding or abetting commission of any of the offense, so when you are conniving with officer of FIRA to commit an offense by reducing their tax liability, so you are liable on conviction to a fine of 50,000 or imprisonment for a term of 5 years, whichever the tax authority deem fit. So those are the penalty and offenses that are available under the Value Added Tax Act. So you may be asked. Then you may also be asked for the advantages. So advantages is a source of income, reliable source of government revenue. So it eliminates the narrow scope and cascading effect of repeat sales tax. So under the sales tax, so you also it's only apply on at the final stage, but at this stage you are going to apply it at each stage of the distribution and consumption. So those are the advantages. So it is a consumption tax, and it is very easy to collect. So once you consume that item, you are expected to pay to pay the value added tax. So those are the advantages. We also have all these disadvantages, which are high cost of keeping record by the company or agent. So because it is mandated that if you are a vatable agent, you must keep record of your transaction. So to keep record of the transactions, some companies don't have competent accountants, so they may end up engaging the service of an external person to help them keep those records, which is costly to the company. So injustice in the distribution of VAT proceed. So the proceed that were some states contribute more than other states, but the allocation is the same, which is what is being dealt with in the new VAT Act. So in the old Act, there is injustice in the distribution, which is a problem under the VAT Act. The corruption on the part of the tax official can render VAT ineffective. So corruption. So because if somebody look at it that if I even pay, most of the money is going to be embezzled. So that may discourage some taxpayer from paying value-added tax. Then problem of inadequate information can make VAT administration ineffective. So when there is no adequate information, so that is a problem for the administration of VAT. So those are high administrative costs on the part of the government. So government, they also need to carry out VAT drive. They need to carry out a VAT visit. They also need to carry out a VAT audit and investigation. And all these are not going to be done by word of mouth. It's at the expense of the government. So this cost will also form cost to the government, which is one of also a disadvantage of the value added tax. So those are the requirements that we are expected to know as far as value added tax is concerned. So any question? Any question? So in the absence of no questions, so we are going to go to the computation part, so which is the computation aspect to calculating of value added tax. So we have the question number 1. The following transaction took place during the month of June 2020. AB Limited supplied raw material to OB Limited for 500,000. OB Limited uses the raw material to produce goods and sold them to SY Limited, a wholesaler, for 700,000. SY Limited in turn sold the goods to a retailer, JT Limited, for 800,000. JT Limited sold the goods to a final consumer for 850,000. Require compute the amount of value added payable to what? To the Federal Inland Revenue Service. So you can see that one single item move from supplier, from the manufacturer to what? To the final consumer. So for value added tax, at each stage of this distribution, value added tax will be applied on that item. And the final burden of the tax is now going to be borne by the final consumer. So the person who consumed that item will be the one that will bear the final burden of that value added tax, because it's a consumption tax. So this tax now, so how do we? So let us look at the computation. So to compute, so as we already know, the first thing, so computation of requirement, computation is very important. Computation of value VAT to VAT payable to FIRS. So there are two ways to tabulate that your computation, or you are going to what? You state it as a single item. Either way. So I want to do the tabular form here. Then we have a vatable person. So we have the vatable person. After the vatable person, we have the sales price Then we have the sales price. Then we have the output VAT. Then we have the input VAT. Then we have the VAT paid. So these are what we needed. So vatable person, if you look at the first thing, we have what AB Limited supply raw material to OB Limited for 500,000. So AB Limited is supplying that raw material to OB Limited. So that means AB Limited is the one selling. Vatable person will be AB Limited. So supply raw material. So when you supply the raw material, he's supplying it at the rate of at an amount of 500,000. So raw material sales price 500,000. And we all know that when there is sales which give rise to which VAT? Who can remind us? Sales. What VAT will sales give rise to? Which type of VAT? Output VAT. So we are going to have our output VAT, which is what? Which is output VAT at the rate of, let me put the, which is at the rate of 7.5%. So 7.5% output VAT. 7.5% of this value of 500,000 will give us how much?
37,500.
37,500. 37,500. So which is what? Which is the output VAT? 37,500. So input will be 0 because we are not told that what? This is where he bought that item from. So nowhere you can claim the input from. So VAT paid will now be 37,500. This same item that AB sold is now being sold by OB. The person who bought it now, OB Limited, now sold it to another person, SY Limited, for 700,000. So
Excuse
that
me,
means,
sir.
yeah?
Like this first one now, like this AB Limited now. AB Limited is the one constructing this VAT payable to IFRS, right?
Yes.
Because when you said the VAT input is 0, that's what I'm trying to get. That's what I want to confirm.
Yes, now it's 0 now. Because, AB Limited, we are not told
Yes, sir.
that he bought that item from anywhere. That means
Okay.
AB Limited is the one that manufactured that produced that item himself. So that means AB
Yes, sir.
Limited did not suffer any input VAT. It's only going to collect output VAT. It did
I
not
understand.
suffer any input VAT.
Okay,
So
no problem.
OB Limited now is not selling that same item at 700,000 naira. This same item now, OB Limited is selling it. When OB Limited sells it, so we are going to calculate value added tax of 7.5 or 700,000. That will give us how much?
52,500.
52,500. This same item now, OB Limited is buying it from AB. OB Limited is buying it from AB. So when OB Limited bought it from AB, AB has charged OB Limited a VAT of 37,500. This 37,500 now to OB Limited will now be what? Input VAT. It will now be what? Input VAT will now be 37,500. Which is what? Which is the one suffered by what? OB Limited when they bought that item from AB Limited. VAT payable will now be the difference between 52,500 minus 37,500. So which is what? How much is that? Which will give us
15,000.
15,000. So after that, the next thing, OB Limited, instead of using that item, SY Limited, instead of using SY Limited, also sold it to JT Limited. So for 800,000 naira, SY Limited is also selling it. SY Limited is also selling it for 800,000 naira. SY Limited will collect VAT on this sales of 7.5%. 7.5% of that amount will give us how much? 60,000. This same item that SY Limited is selling at 800,000, they bought it from OB Limited, which OB Limited charged them VAT of 52,500. So that this 52,500 to SY Limited will now be what? Input VAT 52,500. So VAT payable will now be what? The difference between the two, which is what? 60,000 minus 52,500, which is what? 7,500. Then so then this same transaction, JT Limited, instead of using it, now sold it to final consumer at 850,000. So JT is selling it to final consumer. So JT is selling it to final consumer at 850,000. So JT is also going to collect output VAT, sell it to final consumer and charge VAT for 7.5% at the rate of 63,750 at the rate 63,750. So this same amount, this same product bought at 850, JT has suffered VAT of what? 60,000 input VAT. It will now become input VAT to JT. So VAT payable will now be 63 minus 60,000, which is what? 3750. So then the final consumer has nowhere to transfer it because it's one going to who is going to consume it. So the total amount now, so VAT payable now will now be this total amount is the VAT that will be paid, that is payable on this transaction, value added tax, VAT payable. So this total amount is what is going to be paid to Federal Inland Revenue Service. But it's not going to be paid at once. So it's going to be paid at what? At each of what? Each of these what? By each of these agents to what? To the various relevant tax authority. But this 63,750 will now be borne by what? By the final consumer. So the final consumer will be the one who is going to bear what? The final burden of what? Of that what? Value added tax. So that is how to calculate what? Value added tax. So when you have a various distribution or various chain of distribution. So that is for in the case of, so you can either calculate it that, or you can also calculate it in another form. How do we that? By looking at the output VAT separately and we're removing the input VAT. So we have, as I told us, that invoice credit method. So we calculate our output VAT. So our output VAT will be what? When AB is selling to at 500, that will give rise to value added tax. 500 at 7.5%, that will be 37,500. When OB is also selling, that is 752,500. When SY is selling, that is 860,000. When JT is selling, 7.5 of 850. That will give you a total of 2137. Input VAT. When OB is buying from this person, this 37,500 will be input VAT to OB. This SY, this 52,500 will be input VAT to SY Limited. Why this 60,000 will be input VAT to JT Limited? So we also add all the input VAT and remove it from the output VAT. The resulting figure, the difference between the input minus output VAT will give us a VAT payable, which is what? 63,750. Either way, either any of these two can be adopted in the exam. So when you are given a question related to different chain of distribution as far as value added tax is concerned. So that is how to compute value added tax when you have various chain of distribution by the agent. So then we also have the second question. Which is question number 2. Under question 2, we have Samuel Peter Nigeria Limited during the year ended 30th September 2010 presented the following accounting information. We have turnover, purchases of finished goods for resale, rent, interest, motor vehicle, salaries, profits. Then require, calculate the VAT payable under the 3 different methods. Who can remind me what are the 3 methods available again? What are the 3 methods available for computing VAT? 3 methods. We have 3 methods of computing VAT. I need somebody to
The
remind.
subtraction
Credit
method,
method. So yeah, the
subtraction method,
subtraction method and the
and the
what?
addition method.
Method. So those are the 3 methods. So the examiner wants us to adopt to calculate the VAT using those 3 methods. So let us look at how to calculate VAT using those 3 methods. So we have the question as Samuel Peter Nigeria Limited. That is the name of the taxpayer. So you write what the name Samuel Peter Nigeria Limited. Computation of value VAT payable for. So in the question we are giving for the year ended 30 September 2010. For year ended September 30, 2010. So the first one we have was using credit method. I want to use the credit method first. And I told us under the credit method, that entails you calculating your what? Your output VAT and our input VAT. So under the credit method, we're going to calculate our output VAT first. So how do we calculate our output VAT? Those are the what? VAT on purchase on sales. Output VAT are VAT on sales. So let us go back to the question. So we have what? Turnover. Turnover is the sales. So that is the sales. So we have what? Turnover. So that will give rise to what? Output VAT. And we are not told whether this information is what VAT inclusive or exclusive. And I told you where you are told that, where you are given an information and the examiner did not tell you whether it is inclusive or exclusive, we assume VAT exclusive. So we are going to calculate output VAT on what? On this turnover to arrive at what? At our value added tax. So output VAT on the turnover, turnover, which is what? Because it is VAT exclusive, so that will be what? 7.5% multiplied by the value of the turnover. So what is the value of the turnover? 86,770,000 multiplied by 86,770,000. So that will give us how much? So 86 million. So how much?
507,750.
6507750. So which is what? Which should be the output VAT. We don't know. So we also have, so you now let's input VAT. So how do we get the input VAT? Those are the VAT on purchases of our input of the direct. Don't forget, I told you the VAT that will be part of our input VAT expenditure that will be part of our input VAT will be what? Direct revenue expenditure. We have purchases of finished goods for resale. Because this is what item they want to resell. So this is what? This expenditure is what? Direct. This purchases is direct. So that is one purchases. So direct. So 53 purchases. We are also not told whether it is what? VAT inclusive or exclusive. So we assume what? VAT exclusive, which is what? 7.5%. multiply by, so how much is the value of the purchases? We have 53,920 multiplied by 53,920,000. So that will give us how much?
4,044,000.
4044. 4044,000. So after that, we also
I
have
don't see
other
your Excel so far.
okay. We also have other okay, all right, don't worry. I'm good. We also have other expenditure. Other expenditure we have rent. Rent. Is rent a direct? So now to my question. To this company, is rent a direct? Is what type of expenditure is rent? Let me ask first. What type of expenditure is rent? Is it revenue or capital? Rent. What type of expenditure is rent? Oh yeah, now.
Revenue,
Revenue.
sir.
Is
Revenue
revenue.
expenditure, good. Is it direct or indirect?
Indirect.
It is what? Indirect. So it is not going to form part of what? Part of our input VAT. We also have interest. What type of expenditure is interest?
Is revenue.
Revenue. Is it direct or indirect?
Indirect.
Yeah?
It's indirect.
Indirect. So it's not going to. The maintenance of motor vehicle.
That's capital expenditure.
Maintenance of motor vehicle.
It's revenue expenditure.
Revenue. Is it direct or indirect?
If the mechanic charges, is direct.
Eh.
What if
How
the
is it
mechanic
direct?
charge? If it is used to
Any
deliver goods,
expenditure,
Is
it's
indirect.
indirect.
Is indirect.
any expenditure that you are going to regard as direct must be something that you are going to sell to generate your revenue. Are you selling your motor vehicle? Is this company engaged in sales of motor vehicle?
No.
That means it is what? Indirect. Then salaries and wages.
So sorry, sir. What if the servicing company charge VAT on their service? That's final, what would I call it? This thing burden. So
Which
we can't.
which servicing
They
which
cannot. That
servicing company?
we
The
told you.
What
mechanic.
the question I'm asking here is this motor vehicle maintenance of motor vehicle, whether mechanic charge you or not. Mechanic can charge you VAT. That does not mean this VAT that mechanic charge you. When I was explaining it, that was why I explained those expenditure. That was
What part?
revenue. Hello, wait. This expenditure is type under which type of expenditure?
It's a revenue expenditure, but not direct.
Revenue expenditure. Is it direct?
No, it's indirect.
It's indirect now because this company is not selling motor vehicle. That was why I told you that an expenditure that is direct to one company may be indirect to another company. It is the nature of the business that will tell you whether an expenditure is direct or indirect. So what is now your question?
What of if, like, for instance, now, along the maintenance of motor vehicle now, what of if they bought the spare parts?
If they now buy the spare, what now happen? If you buy the spare parts, are you selling it again? What will
No.
make expenditure? If other expenditure, because expenditure that you are going to deduct from your output VAT must be something that will give you output VAT, an input that you suffer that will give you output, something that when you buy it, you are going to sell it back.
I totally understand you. I just want to know if
If you
we can
buy
take
hello, if you
advantage.
buy spare parts, that spare part you buy, are you selling that? Are you selling that spare part? No, it cannot form part of your input VAT. Any VAT you suffer on it will be part of your expenditure. It will be added as part of your expenditure that will be written to what profit or loss as what as an expenses. So the next one, salaries. What type of expenditure is that? Oh, yeah, now salaries. Hello? Salaries. What category of expenditure is that?
Revenue.
Revenue. Is it direct or indirect?
Indirect.
It's indirect. So it's not going to form part of our expense. Then we have a profit. Profit. What is profit? That is the income generated by the company. So that income, before you can generate profit, you must have made what sales. You have already charged what value added tax on what on the sales you are selling. So that is what gave you the profit. So no value added tax on what on the profit. So that means the only two items that will give rise to what the value added tax are what the turnover and the purchases, the direct purchases. So you know, so the result figure will give you okay. I think the network logged me out. So then if we are also using the subtraction method, so if you are using the subtraction method, so under the subtraction method, that's where I told you that under this method we are going to look at what
Sorry, you were
the
saying
value
something
add
about profits the other time before the network issue.
profit. I told what I said was that profit, no value added tax on profit because it's your turnover that gave rise to the profit. It is what the sales you made after removing your expenditure. That's when you have profits. And already you have what? Remove what? You have what? Already collected value added tax on what? On the turnover. So there is nothing like what value added tax on what? On profit in line with what? With when you are using what invoice credit method. Then under the subtraction method, I mentioned that the subtraction method, that is when you have to look at the value added generated by the company. How do you get that? By removing what? The purchases from where? From the sales. In that case, you have to look at the turnover, the total turnover, which is what? The turnover is 86,770, 123, which is from here, 86,770. Then the turnover, you are going to remove the sales, the purchases, the direct purchases from the turnover. The direct purchases happen to be 53, 920. 920. So you remove it from where? From the purchase, from the turnover. So what you now have will be what? Will be value added. It is this value, which is what this, which is this minus this, will give you the value added. So this value added is what you now apply VAT rate. And what is the rate of VAT? At what? 7.5%. You now apply VAT rate to this value. So 7.5%, 7.5% value added tax rate. You apply 7.5% rate at what? On this value. So you apply 7.5% on 32. So 850. So that will give you this value of what? 24,2463,750. So under, which I said, under normal circumstances, where, so your value added tax, VAT, will now be equals to value added tax payable, will now be equals to this value. So, which is this? So your value added tax will now be equals to this value, which is what? This amount. So under normal circumstances, I told you where you have the same question. Method A, which is what? Credit method and subtraction method will give you the same answer. If you are adopting the same question, you are going to have the same answer for credit method and the subtraction method. So why the last one is what? Addition method. So under the addition method, so that I told us that involves a situation whereby what? You add all rewards generated by what? All factors of production. Reward generated by all factors of production. So let us go to the question. So we have in the question we are giving turnover, so that is income, purchases, income. So then we have rent. So rent, that is the reward generated by who? Reward. Rent is the reward generated by which factors of production?
Land.
Land. So that amount will be stated as what? One reward generated by one factors of production, rent, 2250. So after that, the next item we have is what? Interest. Interest is reward generated by which factors of production?
Capital.
Capital. So interest, we have the interest, which is what? 4605. So we have interest, 4605,000. After that, the next thing we have on the question is what? Maintenance of motor vehicle. Who is going to carry out the maintenance of this motor vehicle? Is what? Individual, which are what? Either entrepreneur or owner of business. So they are the one that will generate that income. So entrepreneur and maintainer, they will do the maintenance. So maintenance of motor vehicle, maintenance of motor vehicle. So that is how much? 1860. 1860. Then after that, we have the next one, which is your salaries. Which reward? Who receives salary?
Labor.
Which factor? Labor. 7.5 million salaries. Salaries, labor. 7.5. Then we have our profits. Which factors of production generate profits?
Entrepreneur.
Entrepreneur, 2750. So profits. 2750. So all these rewards, so those are the various rewards given to us by so all this reward now will be added together to arrive at what is called value added. So we add all these rewards together. So the amount, after adding them, what you have is called a value added. So this value added, you now apply our VAT rate of at 7.5%. So 7.5% of this value will now give you value added VAT payable. So which is what? Which is equal to this multiplied by 7.5%. So we give us that value. So we cannot, the answer will not be the same for answer under additional method. Some companies adopt this method. Usually the advanced country, they adopt this method. But Nigeria, we only use what? Invoice credit method. Please, this other two method, addition and subtraction method, it is only where the examiner asks you to use it, that's what you adopt it. So where the examiner did not ask you, please, you are not to look at the method, so but you are just to know that there are methods that we can also adopted, which are subtraction and the addition method, which are also available method that can be what? Adopted under what? Under the what? The computation of value-added tasks. So that is for that. So we also have the solution here. So which is what? The under the value-added task. Then we also have another question number 3. Then we have
Sorry,
Benji.
sir. Sorry, sir.
Okay.
Hello, sir.
Yes,
Hello, sir.
I'm
Sorry,
with you.
please. This under maintenance of motor vehicle. I don't understand.
Yes.
I don't know. So it
What
skipped
happened to
my
it?
this thing. Can you just explain which under
Who is
factor
going
of
to
provision?
carry entrepreneur? Who is going to carry out the maintenance? Is somebody individual, owners of business. So entrepreneur is reward for entrepreneur. So
Okay, thank
maintenance
you
of
very much.
like mechanic or so they are usually one man business. So they are
Okay,
the one
thank
that
you.
can. So yes. Then question number 3. So we have Benji's International Limited is a manufacturer of hospital equipment that registered for VAT purpose. During the year 2019, the company expanded 1,920,000 on material in the process of converting same into finished product for resale, while it bought its major input for 12 million naira. At the end of the year, only 55% of the total cost of finished product were sold and at 18,240,000. The supplier of major inputs are registered company for VAT. All figures are VAT inclusive. Look at this one now. This one is a VAT inclusive. You are required to compute total value added tax payable for the year ended 31st December 2019. This is now talking about VAT inclusive. So this is talking about VAT inclusive. So I'm going to solve that question here on this. So look at it. We have Benji's International, the name of the agent and or the requirement, computation of value-added tax payable for 31st December 2019. As you can see that this question did not ask us whether adopt invoice credit, subtraction, or addition method. Please, in question like this, you have to adopt credit method because that is the method that we use in Nigeria. That is the method we use in Nigeria. So, we are going to compute your output VAT and your input VAT. So, our output VAT is our VAT on sales. We are told that at the end of the year, only 55% of total cost of finished product were sold and what? At 18 to 40. Please, this percentage listed here is just to cause confusion. The fact that they sold 55%, how much did we generate as sales? It is that amount that we generated as sales that we are going to charge value-added tax on when we are collecting our VAT. So the total sales that we made in this year is what? 18,240,000. Our value-added tax will now be 18,240,000 multiplied by, since we are told that the figure are VAT inclusive, that means instead of that figure to be at 100%, the figure is at 100% plus 7.5. When you add 100 plus 7.5, that will give you 107.5. So in that case, you cannot say multiply by 7.5% again. You will now say multiply by, and we know that the VAT rate is 7.5. It will now be multiplied by 7.5 divided by the percentage that this figure is at. And this figure is at what percentage? Divided by 107.5. Because what reason why we are using 7.5 divided by 1 is because this information is what? VAT inclusive. So where the examiner is silent, where the examiner did not say VAT inclusive, please assume VAT exclusive. In that case, you are going to do what? 7 multiplied by 7.5 or 7.5 divided by 100. Because this is what VAT inclusive, that is what multiplied by 7.5 divided by 107.5. That will give us this value of 1272558. We are also going to less input VAT. Our input VAT will now be VAT on purchases. There's also a word here that they said during the year, the company expended 1,920,000 on the material. Look at it. They spent 1,920,000 on the material in the process of converting same into finished products. 1,920,000 on the material. So that is what cost of what? Conversion. So in converting same into finished goods, that is what that amount they spent, it is after that item has been purchased. That amount is spent by the organization. That means what? No VAT was charged on that item. In the process of converting same into finished product for resale, while it bought its major input for 12 million. The item that we converted was bought for 12 million naira. That 1,920,000 was incurred after we have bought that item that we want to convert. That means we did not suffer any VAT on what? On that 1,920,000. We only suffer VAT on what? On 12 million naira. So input VAT will be on what? On the 12 million naira, which is what? On the purchases of 12 million naira. And we are told it's VAT inclusive. That will be 12 million times 7.5 divided by 107.5. So we are going to minus the input VAT from the output VAT to arrive at what? At the VAT payable. So that will give us what? VAT payable of what? 435,342. So please, you have to be very mindful on what the examiner tells you, whether what you are going to apply what? Inclusive or exclusive. Any question? Any question? So we may also have a scenario whereby we have inventory. It is also very important. And I told you where there is inventory. You can remind us, how do we adjust for inventory? I mentioned it earlier. When there is inventory, how do we adjust for it?
We are going to calculate our cost of sales, sir,
How?
by
What is
adding
the
our
cost?
inventory with purchase, and then by adding inventory and purchase, likewise carrying word, and we now less it with closing inventory.
Which inventory are you adding now? That is what I want to know. Which inventory are you adding?
Open
Yes,
inventory, sir.
opening inventory, and you less what? Closing inventory. So we can also, this question happened to be May 2024 question. It's adapted from May 2024, but it was redefined a little bit. So we added one or two information. So we have Avila Manufacturing is a company that is engaged in the manufacture of different kinds of perfume, body lotion, and other cosmetic products. The statement of profit or loss of the company for the year ended September 30, 2020 is as follows. We have the turnover, less cost of sales, gross profit, other income, less opening cost, operating expenses, interest and similar charges, profit before tax, taxation profit after tax, dividend, retained profit for the year. All are figures. You are provided with the following additional information. Turnover is made up of 64,350 export sales and 141,900 local sales. Cost of sales comprises opening inventory VAT inclusive, closing inventory VAT inclusive, purchase of raw material, freight charges, other direct material VAT inclusive. Can that person mute his mic? Who is that person now? So other direct material VAT inclusive. The company purchased plant and machinery which cost 24,750. This amount was included in opening inventory, VAT inclusive. Value-added tax and withholding tax remitted during the year amounted to 2,173,180 and 1,783,500. You are required to compute the net VAT payable by Avila Manufacturing Company Limited. We are asked to compute net VAT payable. So I'm going to use our Excel. So net VAT payable by the company. Computation of the net. Let me share our Excel. So we have the name of the company, Avila Manufacturing Company Limited. Computation of net VAT payable. We'll see the reason why they put that word net VAT. I'm going to explain it to us when we finish the computation. So in order to compute, we need our output VAT and our input VAT. This information will lead us to workings. Working one. Output VAT is VAT on what? Who can remind us? VAT on what? Output VAT is VAT on what? Sales. So let us now go back to the question. From the question, we are told that, so I want to, turnover is made up of 64,350 export sales and 141,900 local sales. Out of this, which of the sales will attract VAT and why? Who can tell us? Which of the sales will attract VAT? Or is it the total sales? Which of the sales will attract VAT and why?
The local, to me, the local sales will attract VAT because it is done in Nigeria, but export sales.
It is what?
The local sales is done in Nigeria. That's why it attracts VAT. But
Why?
the export sales
Oh yeah, I'm listening. Continue. The export sales?
will not attract VAT because it is something that was done
We,
outside.
we can't hear you. The local sales is the only one. Why the export sales is what? Hello?
It's because Nigeria adopts destination method, so and it's born by
Destination
refinery.
principle. Yes, we adopt destination principle. You are right also. The local sales is going to be charged value added tax. Why export? That is what anything export is not going to be consumed in Nigeria. So, and we adopt our destination principle. So we are going to what? So that will not be what consumed in Nigeria. So that is what. So and under this says we are not told whether what it is what inclusive or exclusive. So we assume it is what? VAT exclusive. So only the what? The export sales. So output VAT. So our output VAT will be what? What is the export sales? 141. Export sales is 141, 900 times 7.5%. Exports sales 141, 7 what? 141, 900. So we apply the tax, the VAT. VAT on it will now be at 7.5% because it's what? VAT exclusive. Because it is VAT exclusive. Take note of that. So that will give us this value for that. For the output is 6. So we also need our input 6. Under the input 6 now, because we are giving inventory, so we need to adjust our inventory against that input VAT. So we are going to adjust our inventory against. So how do we adjust our inventory? So we have opening inventory. We add opening inventory to our push. How much is the opening inventory? So working 2. So we are told in the question that opening, so output VAT, you put in front that what? This amount is from output number 1. Output VAT working 1 in jackets working 1. Opening inventory working 2. Our opening inventory working 2. Opening inventory will be is equal to from the question. Let us go back to the question. I need us to look at the question from our hand. You can see that we are told in the question that opening inventory VAT inclusive is what? 24,915. 24,915. Under note 3, we are now told that the company purchased I hope we can. Are we with the question? Hello?
We're not.
Okay, don't worry. So we have opening inventory, VAT inclusive, 24,915 million. Under note 3, we are now told that the company purchased plant and machinery which cost 24,750. This amount was included in opening inventory, VAT inclusive. This amount, plant and machinery, is what category of expenditure? Who can tell us?
Capital.
Which type of expenditure? Capital expenditure. That means we are not going to add it as part of our input VAT. We must eliminate it from this opening inventory. So we are going to eliminate that this amount of plant and machinery that is included in this opening inventory in our what? In our computation. So we have opening inventory. So look at it. So opening inventory. So opening inventory amount will now give us opening inventory. So opening inventory will give us the value, the total opening inventory, which is 24,915 minus 24,750, which is 24,915,000 minus 24,750,000. So that value will give us, this will give us a value of which is equal to this, it will give us this value. So that amount will give us, if you look at that difference, how much do we have there? 24,915 minus 24,750. How much did he give us? 24,915 minus 24,915 minus 24,750. 165. So that will give us 165. So this 165 now. So 165. So we have 165,000. So this 165 now is what we are now going to apply. Is what we are now going to apply our value on. And in the question, we are told that that opening inventory is VAT inclusive. And the VAT we calculated up. This VAT that we calculated up here is calculated at the rate of VAT exclusive. So that means we must also make this our opening inventory to be what? VAT exclusive. So if something is VAT inclusive now, so what that means is that what? That value is at what? 107.5. So if I want to make it to be what? VAT exclusive, that means I want to make it to be what? At 100%. So to make it at 100%, opening inventory will not be equals to what? 100 divided by 107.5 multiplied by 165,000. Multiply by the 165,000. So that will give us the value for the opening inventory, which is 153,488. 153. That will give us 153,488. 153,488. So also this item, we are going to add purchases. We have purchases. Don't forget, the purchases must also be stated at once. So in the question, we are giving purchases. We are not told whether it is what exclusive. So that means it's already what exclusive. So we write what the amount of the purchases 94,600, 94,600 purchases, 94,600, 94,600. Then after the purchases, we also have, we are giving freight charges, 2570 freight charges. It's also a direct cost, freight charges, 2570. After that, we are also giving other direct material. Under that other direct material, we're also giving a note. Under other direct material, we are told it is what? VAT inclusive. We must make it to be what? Exclusive, because other items are what? VAT exclusive. So we must make it to be what? Exclusive. So VAT inclusive 14544.75. So we make it to be exclusive. Other direct material, other direct material. To make it to be VAT exclusive, that will be 100 divided by 107.5 multiplied by 14. Multiplied by 14. So what is the value? 544,750. 14, 544,750. So that will give us the value of what? Of the exclusive, which is what? 13,520. 13,520,000. So this value now, so we are going to add up all this value. So when we add up all this value, we now less closing
It's 13
inventory.
million 530.
Yeah?
13,530,000.
13,530,000. Okay, it's 13,530,000. Okay, thank you. 13,530,000. Okay, thank you. 530,000. So let's closing inventory. So to look at the closing inventory, we also go back to our. So let me also go back to the question to know what we are. Under the closing inventory, we have what? We are told that closing inventory, VAT inclusive. We also make it to be what? Exclusive. So we are not told that for the closing inventory that any item of capital expenditure is included. So we are only told that for VAT inclusive. So we make it to be what? Exclusive. So we less for closing inventory. So we say less closing inventory. So less closing inventory. So that will be 100 divided by 107.5 multiplied by the value. So how much is the value given to us? So that is 4865 multiplied by 4865 multiplied by 4865,000. So that will give us the value for the what? For the closing inventory, which is what? Value for the closing inventory will give us 38,013,953. 38,013,953. So for the closing inventory. So we look at the difference between this and this. So this will be this minus this will give us the cost of goods sold, which will be what? The cost of goods sold. So this cost of goods sold now is what we are now going to apply our VAT on. So we now apply the VAT on. So don't forget that we have made it to be a VAT exclusive. So we are now going to apply what? The value added on this VAT. Value added will now be what? At 7.5%. So all the value at value VAT exclusive. So this will be what? Is equal to this multiplied by 7.5%. So that will give us this value of this amount. So we are going to, so this will now be our input VAT, which is 68,12,965, 12,965, 965. So which is this? So the resulting figure will give us what is what? Value added payable. So we now have a VAT payable. So which will be what? This, which is equal to this. Which is this. So which is equal to this minus this. We give us what? The value added payable. So we are less amount already remitted. We are told in the question that the company has already remitted certain amounts. So let us look at it. So we are told from the question here, the question told us that the company has remitted the amount value-added tax and withholding tax remitted amounted to, so we are going to less the value of value-added tax remitted, which is 2,173,180. 2,173,180. So less VAT remitted, 2,173,180. So the resulting figure will now give you what is called net VAT payable. So which is what? D equals to this minus this to give us the net VAT payable. So that is why, so the reason why they call it net is because the company has remitted an amount before. So that's why we put net here. You can see that in the previous one we did not put net. So because they have remitted certain amount initially, so that's why we have it as what? Net VAT payable. So the difference will be what? Net VAT payable, which is what you have here as what? The net VAT payable. So you can be given a question that we also have what? Inventory. So you need to adjust and what? And make what necessary adjustments to what? To before computing your value added tax. So any question?
Yes, sir.
Okay.
Please, sir, I'm sorry for taking you back. How do you get the VAT payable, sir? Okay.
VAT payable. Input.
No need, sir. I've already get it, sir.
Okay.
Now, can
So
you
any
go
other?
back to the work note where the Excel sheet? That first work note you wrote export goods. I think it's local goods.
Okay. Okay. This place, have you? Okay. Yeah, it's exports.
Local sales. That's supposed to be local sales.
It's local, yes. Local. It's local sales. Yeah. So that is how to compute or calculate what our value added tax. So you can be told of, and you can be asked by the examiner to compute your value added tax under various scenarios. And this
Okay.
value added tax is a recurring aspect topic. Please, no diet. That's what question will not be tested on value added tax. So please, you need to familiarize yourself with the principle of value added tax. You wanted to ask a
So,
question?
yes, I want to ask. In the former computation we did when we were calculating for VAT inclusive, we used just 7.5 over 107.5. But
Yes.
in this inventory side now, is it because we want to turn it to VAT exclusive that we use 100 over 107.5?
Yes. It is when you are calculating VAT that you are going to use 7.5 divided by 107. As at this period, we are not calculating VAT yet. As at this
Okay.
period of inventory, that stage of inventory, we are not calculating VAT here. We are just converting from inclusive to exclusive.
Okay.
So we are converting from inclusive to exclusive. So that's why it is when you are calculating that you are going to apply what? The 7.5 divided by 107.5.
Okay, sir. Thank you.
Any other question? Any question? Okay, in the absence of no questions, so this is where we are going to end the class and stop the topic. So you also have other questions there, so we can try and lay our hand on them and look at them at our leisure time. So thank
Okay.
you very much and have
Sir,
a
please
lovely
share
day
the
ahead.
material, this one now and the solution.
Which one? The material
This
is on the
material
group
and the
now.
solution.
It's on the group. Material is on the group. Check the group, but I will share the solution. But the material is
Okay,
on the
sir.
group. So, okay, any other question? Okay, all right. Thank you.